Hello, I'm Lelda Smits for the Capital Network. Joining me here at AMP Capital in Sydney is its Head of Investment Strategy and Chief Economist, Shane Oliver. Shane, wonderful to speak with you.
Great to be here.
Now, Shane, we're often bombarded with negative headlines, especially investors and the financial press. Which negative headlines are sticking out for you?
Well, I guess there's several that stick out for me. You constantly hear this talk about someone saying, sell everything. You know, we're going to have this massive crash. And occasionally do have these falls. Most of the time, markets sort of trend higher over time. And even when we do have a pullback, it's just that, it's a correction. On Australia, you get this constant talk about a recession. I've seen lots of ads out there. I've seen lots of predictions of recession. They seem to come along every 3-6 months or so. In fact, ever since the mining boom ended, we've been told we're going to have a recession caused by the end of the mining boom or caused by the coming property crash, which never eventuates. So these things keep people very nervous, I think.
Absolutely. Well, you've highlighted a few there. We've got the mining gloom and doom. We've got the recession talk, the housing crisis. Why don't you think these headlines are actually painting an accurate picture of what's happening in Australia's economy?
I think there's a couple of reasons. Oftentimes they key off a particular event, which may be just one of many. So it's taken out of context. And then, of course, the headline then exaggerates it. The other one, of course, is that it's quite easy to get a headline if you want to in this business. If you want to be alarmist, we all know the old story, bad news sells, good news does not sell. If I want to get a headline, best way to do that is to come out predicting a recession.
Absolutely, and then we get some clickbait. But Shane, how about on the positive side? What are your top 3 reasons that investors should be feeling positive about the economy?
Yeah, there are 3 reasons. First one is the economy is growing. Despite the end of the biggest boom in our history, our economy is growing. The weakness in Western Australia and the Northern Territory has been offset by strength in places like New South Wales and Victoria, as sectors like housing, retailing, tourism, higher education, they've all sprung back. That's the first point. Second point is that the worst is probably over for the mining boom slump. So we know there's been a massive collapse in mining investment. We know there's been a massive collapse in iron ore prices and so on. But if you look out there, the signs that these things might be getting towards the bottom. And so the big drag from that is coming to an end. And finally, there's a huge surge going on in public infrastructure investment around Australia, particularly in the East Coast cities. Part of that is the old Joe Hockey asset recycling initiative. But whatever it is, there's a lot of activity going on. So all of these things, I think, are keeping the economy alive and going well.
Okay, so they are some great positive points there, but for investors, as we know, when they're navigating the investment landscape, they need to keep the positive and the negative in mind. What would be your parting warning to investors trying to balance some of these negative headlines with some positive indicators?
Well, to me, I think the key is here to try and turn down the noise. When you hear these headlines, try and put it in context. You know, obviously you're going to get these negative headlines, realise the motivation as to why they're there, because bad news sells, and then look at the context of things. And I think as an investor, you've got to realise that assets which generally are connected to an economy, to growth, will perform well over a long period of time. Don't get distracted by the bad news in the headlines.
Well, Shane Oliver, thank you very much for your insights and for that very positive warning and update today.
Thank you.